In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm Rick Everett, along with Joshua Cicora of Market Tax Services. Joshua, welcome in.
Yeah, thanks for having me.
We've spoken often with our financial advisors of Market Advisory Group about the importance of having a CPA involved in the retirement planning process. It's our first opportunity to have you with us as we officially launch into tax season. Joshua, when you come into the room with a client and a financial advisor, and you can see the tax question marks almost literally on the client's forehead, I would have to imagine a sense of calm comes across the room once they realize that there's somebody there that can help without having to run all the way across town.
Right, you're absolutely right. When I meet with a client, it can be something as basic as we need to pull money out of our retirement accounts. What kind of taxes should we withhold for that? And the financial advisor can give you a guess of an answer, but when I'm in there, we can take a look at their tax situation and talk about what would be specifically appropriate to their situation. And then it gets much more detailed from there. How do these different types of accounts get treated? What are the tax consequences if we do A, B, or C? And having someone there to help address those questions, you can just oftentimes visibly see the client, the person sitting on the other side of the table, relax, and knowing that those answers are there.
Would it be safe to say that in most cases, if somebody's going to one of the box store investment firms that you see on every street corner, that they're potentially not getting the full picture they need in order to adequately plan for taxes?
I would definitely agree with that. If you're going to, whether it's one of the big box firms, whether you're doing your taxes yourself online, you're always doing it in a retrospective manner. That means right now you're dealing with the taxes that happened last year. So that is not tax planning, that's tax preparation. You're just reporting to the IRS what has happened. You're not taking charge of the situation and deciding what will happen.
We continually offer people the opportunity to come in for a no obligation complimentary consultation, whether it has to do with the investment portion, the estate planning, Medicare and questions there, or the tax planning. How many people, when they come in and sit down on a first consultation, find themselves a little bit astounded by the fact that the whole proposition of planning for taxes had never been mentioned to them before?
More often than you would think. People maybe know that they should be doing tax planning, but we're busy, life happens, and it just kind of gets passed by the wayside. For a lot of people, the only tax planning they do is deciding how to fill out their withholdings with their employer. And they don't ever sit down and talk about how they want their taxes to look for that year. And so when we meet, we have a conversation and we start exploring what's going on in their tax situation. While they think it might be just, okay, we check this box, we have this level of withholdings or whatever, as we start to dig into it and unpack what they have going on, they find out that they do have more options at their disposal than what they may have been aware of.
Dad always used to say there were two things you could count on: death and taxes. I'm going to venture a guess that there's a third thing that we can always count on, and that's changes to the tax laws.
I couldn't agree more.
2021 brings with it some unique challenges as far as filing taxes, and we're going to get to that in a little bit down the road in this segment of the show, or in this edition of the show. But I wanted to touch first on the importance of tax planning as it pertains to Medicare in retirement planning.
Yes, that is often a big surprise when we bring up that component to the conversation. People are aware that as they have more income, they have more taxes. What they aren't often aware of is that if they have more income, they could have more Medicare premiums. That when we kind of start walking people around that, show them some of the literature, show them at the different income places where those changes start to happen, there's often slack jaws around the table, or nobody ever told me that before. Why didn't, my previous advisor, why didn't whoever let me know about that beforehand? Now, whether it's they would have made different decisions or they're already are suffering from it and they would like to see if there's a way out, that is often a surprising topic.
Another phrase that has come to light in my world of recent is legally avoidable taxes in retirement planning. Share with me a little bit about that.
Yeah. So there's a couple different ways you can do tax planning. One is to see what deductions, what different tax brackets, what options you have that are legally available to you. The other option is to claim deductions that don't apply, to claim credits that you don't qualify for, and those are the things that get you unpleasant letters from the IRS and penalties and interest and things of that nature.
Now, these legally avoidable taxes, I'm going to guess that your friendly internet online filing system is not going to make those completely aware to you, are they?
Oftentimes not. You need to know what you're looking for in order to tell that online filing service what you need to have done. So maybe it's education credits, and unless you know how to tell it that you've got those education expenses, it won't know how to deal with that. Maybe you purchased alternative energy properties, and if you don't tell the software that you have those, it doesn't know to get that information.
At Market Advisory Group, we provide a holistic approach to retirement planning, whether it's through our lead CPA, Josh Cicora, at Market Tax Services, Eidelman Law Firm for estate planning, or Market Advisory Group for the investment side of things, along with Market Medicare advisors. We're all under one roof, and your interest is us taking care of you. We're invested in you at Market Advisory Group. I want to touch on the estate planning for just a moment, Josh.
Sure.
Are there things people can do in tax planning to lessen a tax burden on the people who are inheriting?
Yeah, oftentimes if they make the necessary transactions, they can deal with taxes today so that when their beneficiaries, their loved ones, their preferred charitable organizations receive monies, it doesn't come along with a tax bill.
And there are ways to maximize deductions on a current year's tax filing through charitable contributions, but those laws are ever changing also.
They are always changing, and there's different qualifications that can apply. That's why it's important to work with a team of advisors who can talk about not just what you can do to mitigate the taxes, but also whether that makes sense in your particular financial situation.
What is the best day to begin tax planning?
Yesterday.
If you have a question for Josh at Market Tax Services, please go to their website at markettaxservices.com, or you can utilize the telephone at 316-803-1040. If you'd like a look at the holistic approach of Market Advisory Group with anything retirement, please go to our website at ionretirement.com or give us a call. We have operators standing by as we speak at 316-252-8707. If you go online and would like to pose a question for a future show, please do so and leave us your physical address. We'll be glad to send you one of our Ion Retirement coffee cups. He's Josh Cicora with Market Tax Services. I'm Rick Everett with Market Advisory Group, and we'll be back with more Ion Retirement right after this.
When people work with Market Advisory Group, they get a feel of sense of family. There's a lot of relationships that are made and going on in this conference room, and we really take a lot of pride in that and a lot of satisfaction in that.
Every client we work with, we make a custom-made plan to fit them and help reach their goals in life. And then another thing that makes us unique is we want to meet quarterly with our clients and have reviews.
Market Advisory Group, we have a process, and the process we take people through is first to understand what they have, understand who they are, and then we put together an income plan for them and show them how they can look forward to retirement and not look, though retirement is going to be a stressful time. It needs to be a stress-free time.
A few unique features of working with Market Advisory Group is holistic in-house financial consultants. We've got an in-house CPA, Joshua, an in-house estate planning attorney, Gerald, an in-house Medicare advisor, Bill. We rely on all of those professionals for, again, additional service within our consultative process, making sure that we've got the advice and the expertise behind the recommendations that we make.
You know, as an advisor, I'm not there to sell them one way or the other. I'm there to educate them, to let them know what their choices are. Then I try to help them make the right choice where they can save money and feel confident in their decision.
Absolutely, the best part of my job is getting a stack of paperwork from somebody and they don't know what to do, and then I can turn around and give them back a tax return, but also to be able to explain what they can do next year that will give them a better answer than what they had this year.
When we've got clients that are calling and they need to help out a child or need to help out a grandchild or need to help themselves out and they're in a situation they didn't expect to be in, I really relish the opportunity to help them through that, help them make the educated decisions in somewhat stressful situations, because a lot of folks don't have that type of counsel.
We meet with so many people one-on-one in this office that don't ever end up becoming a customer or doing business with us, and that's okay. But when they leave our office, we know that we've helped them either get some answers to some of the questions they had or get some clarity on maybe their own path.
But one of the things that we hear all the time is, I wish I would have met you guys 10 years ago, because how much further could I be down the road? Well, Johnny Appleseed said, you know, when's the best time to plant a tree? 10 years ago. When's the second best time? Today. And so if we can help people today going forward, that just brings an incredible amount of comfort and excitement for us to come to work every day.
Hi, and welcome back into Ion Retirement. I'm Rick Everett, along with Joshua Cicora, the lead CPA with Market Tax Services. Joshua, over 2 decades as a CPA, you've seen a lot in that amount of time. When I'm visiting with the investment advisors of Market Advisory Group, we often speak about the set it and forget it mentality of investing. I'm assuming, though, when it comes to taxes, you can just set it and it's good forever, though, right?
That's right. I mean, it's not like life changes. It's not like taxes change. It's just like a crock pot. You just set it and forget it.
Taxes change constantly. Yep. And so how do you, as lead CPA at Market Tax Services, keep your clients abreast of the changes to maximize their tax benefit, if you will?
Yeah, so we meet with our clients routinely, not just when it's time to prepare the return. And so we'll start to develop a plan that's kind of it's a living plan, right? So we make changes to this plan as we go throughout the course of the years that they're with us. Oftentimes we'll start early in the year, we'll talk about withholding, so this way we can have those set appropriately for their tax and income situation. And then as the year moves on, we talk about specific transactions they can undergo to achieve different ends, whether it's trying to minimize taxes, whether it's trying to achieve retirement strategies or estate planning, things of that nature. And then we kind of start the cycle all over again the following year. We've kind of got a baseline understanding of what's going on, a baseline plan, but life changes. Maybe they need more income, maybe they need less income out of their retirement accounts, maybe they want to do more of one thing that they did the prior year, maybe taxes change and there's new transactions they can do, or transactions they used to do they can't do anymore. So we'll constantly keep tweaking and modifying the plan as both their goals and desires change and the tax laws we have to operate under change as well.
Earlier in the show, we touched just a little bit on how tax planning and Social Security can work in tandem. In essence, though, when it comes to retirement and tax planning, a lot of things come into play, not just Social Security or how your benefits might be affected. Help explain that to our viewers.
Right. So once you do move into your retirement years, often there's many sources of income that are playing into a situation. Maybe most people have Social Security. Some people have pensions. Some people don't. Some people have retirement accounts. Some people don't. Some people have investments that they're going to draw on, and so we have to blend all these things together to make sure that they're going to continue wanting a paycheck, if you will, once they retire. And so we have to blend all these different sources of income to make sure that they're achieving the minimal tax liability possible so that those dollars will stretch as long as possible.
In retirement planning as it pertains to taxes, what would you say is one of the most common questions your clients ask?
Something people often ask is, why was my Social Security taxed? And then we need to talk about, based on that, what income they have going into their tax return and how that plays in with tax law to determine the level of taxation they're seeing on Social Security. Oftentimes it seems people think that Social Security is not taxed.
Well, initially it started out as a program that was a tax-free retirement savings.
That's right. In 1983, that got changed, and they made that retirement benefit, that Social Security income, taxable. But they did it in such a way that if Social Security was your primary or only source of retirement income, they didn't want you to have to pay tax on it. But then as more and more income came into your situation, they wanted more and more of those benefits to become taxed.
Now, is Social Security, as it pertains to taxes, much like income? In other words, Social Security can be taxed at different rates?
Your Social Security is taxed at the same rate as your regular income. So let's say you are in a 22% tax bracket, then some of your Social Security benefits will be taxed at either a 10, 12, or 22% rate, depending on how it falls out. But where it's different is that different amounts of your Social Security benefits will flow in to your taxable income. So like when you're working, you're getting that regular payroll. Those dollars are 100% taxable. But Social Security is only partially taxable. Maybe it's 50%, maybe it's 75%. Under current tax law, it caps out at 85%.
If you had to make an educated guess, how many of your clients before speaking to you do you think had somewhat of a grip on how Social Security was even taxed?
Maybe 10%. A lot of people know that it does get taxed because they see it on the return, but very few people have an idea of the mechanics to go on behind the scenes that determines that level of benefits that flow into their income.
As we mentioned at the beginning of the show, tax season is here, and we're going to visit about filing of 2021 taxes with lead CPA Joshua Cicora of Market Tax Services in just a minute. But first, if you would like a complimentary, no-obligation consultation of how your taxes are set up in retirement, or perhaps your investment strategies, or estate planning, Medicare questions, please go to our website at ionretirement.com. Also, you can view past episodes of the show there. And if you have a question or would like to schedule a complimentary, no-obligation consultation with Market Advisory Group, our operators are standing by at 316-252-8707. Again, 316-252-8707. We'll take a look at 2021 filing of taxes with Joshua Cicora right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no-obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Hi, and welcome back into High on Retirement. I'm Rick Everett with Market Advisory Group, along with Joshua Cicora, the lead CPA with Market Tax Services. And tax filing season is here. 2021 had a lot of changes. The last 2 years have been anything but normal, Joshua. But as we look at people in preparation of filing 2021 taxes, there comes up the age-old question of paper filing or e-filing. I didn't even know people did paper filing anymore, but are there advantages to that?
No.
Okay.
Strictly disadvantages. So some people like to paper file the return, whether it's because they want to fill it out themselves by hand, whether they think it's going to reduce their audit risk, whether they think it's going to help protect their identity. I think those all come from a misunderstanding of how e-filing works. If you mail something in, there are many human hands that are going to touch those documents along the way. And if identity theft is a concern, any one of those touch points could be a place of identity risk. Whereas when you e-file, it uses the same security that the banks use, right? So it's the same level of risk you are already going on by participating in the banking system. Some people think that if they paper file the return, it's going to reduce their audit risk. What those people often don't realize is that the first thing that happens when the IRS receives your paper return is that someone has to sit down and enter it into the very same system where e-filed returns go. So that there introduces an element of human risk. That IRS representative who's entering your information into that e-file system, they could make a mistake, transcription error, something of that nature, which then could cause problems that didn't exist originally in your return, thereby raising that audit risk. And then paper filed returns take a very long time to get processed. So if you have a refund going or coming to you, it might be just a Christmas bonus you're receiving. It's going to take that long. And so, there's really no advantage to paper filing your return, with the exception of the times that the IRS does require it. There are certain forms you have to file that can only be paper filed. If you receive certain forms, you might have to paper file your return. But then outside of those situations, you should always e-file.
Let's talk a little bit about the uniquities of filing for the 2021 tax year. Child tax credits, those are something that will be taken into account for everyone that received them. But there's a couple of different things that can really affect a child tax credit and who gets that. Share with us.
Yeah, so real quick, the basics was that the child tax credit was enhanced from 2020. So for the littlest kids who are under 6, it's going to be $3,600 per kid. For the older kids up to 17, it's going to be $3,000. And as an added benefit this year, half of that credit got paid out via 6 monthly installments during the last half of 2021. But that's where the headache's going to come in. So you receive those payments, but unless it's a traditional nuclear kind of family where it's the joint filers having the same kids every year, or in those situations, it'll work fine. However, if you have anything else going on, the parents are not filing a return together. Shared custody. So the kids flip-flop between years. One parent might got paid the advance when the other parent is claiming them on the actual return that year. There's going to be safe harbors where if your income's under a certain threshold and you're in that situation, they'll forgive it. There'll be other situations where your income's over those thresholds, so you'll have to repay part of it or all of it. So lots of complications going on there. To try to help that, as much as the IRS can help us, they're sending out letters letting people know how much of the credit they did receive during 2021. What's going to make that more complicated, though, is in that traditional nuclear family, the two parents will each receive letters documenting half of the payments that were received. So we have to remember to add those together, and if only one parent enters their information when doing the return, there's going to be problems.
Another unique situation when it comes to filing this year that we hadn't ever even thought of 3 years ago, stimulus payments.
That's right. So it almost seems like distant memory now, right? Receiving those payments back in March or April of 21, but the IRS still remembers. And to help us remember, they are sending out a letter letting people know what they did receive according to IRS records. In most cases, that should match to what the people actually received. If it didn't, there's additional steps that may need to be taken to clarify those errors. If you claim something on your return that doesn't match to the letter, then your return will have to go out for manual processing. The people who are in that manual processing now are the ones we're hearing about who, even though it's almost a year later, they're still waiting for their 2020 return to be processed.
Another thing that comes into play this year for some people is what's called a recovery rebate credit. What exactly is that?
Yeah, so the recovery rebate credit will tie into those stimulus payments we were just talking about. So for whatever reason, let's say you did not receive that third stimulus payment back in March or April of last year. Well, then you have the opportunity to claim those funds now, not by getting a stimulus payment, but getting the recovery rebate credit, which is something you claim on your return. When you file your return, you put into the return what you did receive for stimulus, or you put that you didn't receive anything, and then the return will then say you get an additional $1,400 credit per person on your return. But if what you're putting as a recovery rebate credit does not match what you should have received as a stimulus, then you're going out to that dreaded manual reconciliation process again, and it'll be a long time before your return gets processed.
And in a lot of cases, the IRS sent out a letter stating that you do have a recovery rebate credit coming. MarketTaxServices.com is where people can go to find out more information on filing of 2021 taxes or estate planning and taxes as they pertain to it. Joshua Cicora, lead CPA with Market Tax Services, thanks so much for being with us.
Yeah, thank you.
That's going to put a wrap on this week's show of Eye on Retirement. Remember, if you'd like to schedule a complimentary, no-obligation consultation with our team, please go to our website at eyeonretirement.com. And if you have a question, our operators are standing by at 252-8707.
This broadcast is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of foundations and its affiliates. The information contained herein does not constitute securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns is not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or is excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC registered investment advisor. This broadcast is copyrighted by Market Media Network. All rights reserved. Brought to you by Market Advisory Group. Invested in you. Call 316-252-8707. That's 316-252-8707. Or visit marketadvisorygroup.com.